Joining us here at Post 9 this morning is Twilio CEO Khozema Shipchandler. It's great to have you in. Welcome. Congratulations.
Yeah, thanks for having me. I mean, it's quite the milestone, and it's a milestone, right? So it's something to be proud of, but I think we're even more excited about what's to come.
Talk about we mentioned the performance. You're hanging on to a 30% gain for the year. IGV's obviously had its troubles. What do you think the difference is?
I think what the market has realized is that we're one of those rare companies right now that has both an AI moat as well as an excellent set of financial characteristics, right? So we've been able to reaccelerate growth. We've been able to drive operating leverage. We've been able to create a bunch of free cash flow. And I think perhaps create some distance with our peer set in terms of our also ability to drive down stock-based compensation. And so when you add all those things together, that's a pretty attractive setup for an investor.
We mentioned this era of agentic AI. Talk about how you benefit from that.
Yeah, I mean, I think it's one of these things where 10 years ago, if you look back, we were one of the companies that really started to animate the gig economy. And I think sitting here today, we're one of the companies that's really starting to animate the AI economy. And I think the way that we do that is every single company needs a way to be able to reach their customers. That means they need a communications platform to do that. Increasingly using AI, we've got a contextual data layer that sits underneath our platform. The ability to put all of those different things together and create value for our customers, that's what we do. And ideally, we position ourselves as sort of the Switzerland of the AI era.
So if the classic use case in the gig economy era was helping Lyft communicate with its drivers and its customers, what would a classic use case be in this era?
I think the idea is that how do you take that information and now anticipate what it is that a consumer wants? How do you take some of those data signals that one of the customers that we serve has collected over a very long period of time? We refer to that as customer memory. How do you use that in a persistent way to be able to create additional value, better experiences, more personalized interactions between the companies we serve and their consumer base?
Well, just explain it. So as enterprise adopts AI and they have their own models that they use, can't they do that communication with their own agents in customer service, or you have to play that role?
No, we're really the back-end infrastructure that delivers all of that, right? So right now, what you see happening is there's tremendous takeoff in terms of voice AI in particular, right? So for any company to be able to send a voice communication to their consumer underneath, they need voice infrastructure to be able to do that. They need a software layer to be able to connect to the telephony to be able to ultimately reach their customers.
So when people say the call center's going away, is that true?
I think that there's some merit to that over time. I mean, I don't think that's going to happen necessarily overnight, but I think those human-driven contact center interactions are probably going to translate over to ones that are more AI-oriented. But even as that happens, you still need underneath that a voice infrastructure layer. That was actually Twilio's first API, and so that's something that we're very, very good at.
You mentioned stock-based comp. I think you brought it down to less than 10% of revenues for the first time since the IPO. How did you do that, and does that bring any risk at all that you may lose employees?
I don't think so. I mean, I think one of the things that we've really tried to do with our employee base since I took over is be as transparent as possible with them about the condition of the company at all times so that they can make their own decisions about the health of the company, the prospects of the company, and with that information, they can say, look, is this a story that I want to be a part of? And by and large, we've seen attrition actually come down to historic lows. We've seen our engagement go up to historic highs. And so I think that transparency has really helped us. And in stock-based compensation in particular, we were very clear with employees about this is what it means. Now, on the other side of that, we also think there's a lot of appreciation in the stock that's left. And so this is what it could mean for you as well in terms of wealth appreciation.
Free cash flow is 132, I think it was 132 million in part, some of the things we're discussing there. You know, how do you view it in terms of here, the growth rate?
I think we have a tremendous amount of optionality in terms of like what we can do with our free cash flow. I think our goal is to generate $1 billion plus of free cash flow every single year. And so I think we're very much on track to be able to do that based on our 25 results, what we forecasted for 26 to investors, what we've kind of signaled for 2027 as part of a broader framework. And I think that amount of cash generation gives us tremendous flexibility in terms of either stock buyback or, do we want to look at potentially some M&A if the right technology comes along?